Hey guys, welcome to the Liberal Hivemind, a channel solely focused on exposing the abundant hypocrisy of the left. You know, I recently heard somebody say that inflation or the economy won't be the right angle to go after Joe in the 2024 election. It seems like the thought process is that everything's gonna be fine in the next 12 months. Inflation's gonna be down, the economy's gonna recover by the time the 2024 election comes around. Inflation's no longer gonna be a thing. It's a bad talking point. It's gonna turn into a Joe Biden W. Well, I'm here to dispel that notion. I think people who are promoting that idea are promoting absolute sheer copium. Let's continue to go in on this ridiculous Bidenomics lie. The economy is not in recovery. I'd argue the exact opposite is happening. More pain is right around the corner. Let me make my case, but this video is actually brought to you guys by a sponsor, a quite relevant sponsor, so let's play that clip. This video is brought to you guys by American Hartford Gold. The powers that be are trying to convince you that we're in an economic recovery, everything's fine. Meanwhile, over the last 2 years, it seems like the cost of living has nearly doubled. This fiat currency scam continues to hurt you in this age of money printing where money isn't even real. Bank runs are happening, banks are failing, and to make matters even worse, the Russian government just confirmed a new BRICS gold-backed currency, signaling a possible end to the petrodollar, which is backed by fake fiat US dollars. The world is complicated, economics is complicated, and it seems like no matter what you do, no matter how hard you work, your purchasing power just continues to become weaker. Well, there's a clear answer in tough economic times. The answer is to divert a portion of your portfolio in stable, tangible assets like precious metals, gold, and silver. And American Hartford Gold is the best in the business. One phone call and they'll deliver physical gold and silver straight to your doorstep, or they'll deliver it directly into your IRA or 401k. They're the best and only option in the business, with an A+ rating from the Better Business Bureau and decades of experience in the business. Not to mention they're running an amazing promotion where you can receive up to $5,000 of free silver on qualifying orders. What are you waiting for? They're one call away. Simply call 844-440-1005 or text Hivemind, one word, Hivemind, to 65532. Get them on the line, friends. Support the companies that support us in the work that we do. Now back to the video. Alright folks, so people say Bidenomics is working. Republicans have to shift their message. Please explain to me how that's the case. How is it possible that Bidenomics is working? How is it possible that we're going to see a miraculous recovery out of nowhere when huge swaths of the population are literally going broke?
Americans have burned through nearly all the savings they built up during the pandemic, and now the Federal Reserve Bank of San Francisco is warning that a lack of available cash could hurt the economy. Julia Chatterley with us again at the table for more. A lot of the banks were waiting sort of for this day to come, saying, watch out. All of this excess cash or liquidity for someone at home
$2 trillion worth.
It's going to dry up, and then what? So and then what is what the San Francisco Fed is addressing.
Yeah, they're saying that we could burn through this cash as early as this quarter. So this sort of day of reckoning that we've all been talking about could be upon us, because the consumer has been such a fundamental part of keeping the US economy out of recession with all the spending that we're doing. So there is expected to be an impact. The question is, what do consumers do once this cash runs out? The backstop then is their weekly paychecks, monthly paychecks, of course, or debt. And that's especially true for lower income families, of course, because they've got less ability to adjust their spending.
The most recent study says that Americans are burning through pandemic-era savings. You know, the Fed has been telling us for almost a year, don't worry, everything's okay. We don't see a recession in the near future because Americans have a good amount of savings. In fact, we're seeing the highest levels of savings. People have a good financial cushion. Fast forward maybe 8 or 9 months. Maybe it's been a year, I don't know. Time just seems to go so fast. That little cushion, that safety net, has all but evaporated. There is no more cushion. It has simply been wiped out by exactly one thing: Bidenomics. And of course, again, as predicted, inflation is proving to be a whole lot stickier than expected. Sure, headline inflation is down, and you're seeing all the talking heads trying to give Joe Biden credit. Same thing with all these Democrats. You know, this is the message they're pushing.
President Joe Biden and Vice President Kamala Harris have been laser focused on fighting for the issues that matter most to the American people. And by every measure, my friends, they have delivered.
but the reality is the same troubles persist. Joe Biden tries to take credit for inflation going down, but prices are obviously still up massively, significantly from when he took office, and just because headline inflation's going down doesn't mean core inflation is going down. And that is setting up what I'd describe as a nightmare scenario. Jerome Powell, chairman of the Fed, just recently said this during a press conference.
It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective. We are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy.
The Federal Reserve is now prepared to raise rates further because inflation is still too high, still too sticky, and what they're looking at specifically is core CPI, not headline CPI. That alone is one thing, but that mixed with the fact that now people are running out of a safety net cushion, people are literally going broke, and even worse, compounded with credit card debt hitting a record high of $1 trillion, we're most likely reaching what I'd argue is possibly a nightmare scenario. This chart that you're seeing right here, this is not sustainable. Credit card rates are above 20%. People are living off debt, they have no more money, their wages can't keep up. Not only the cost of goods, but cost of housing is becoming increasingly more unaffordable as we're hitting 20-year highs in mortgage rates. Does this seem like a situation that's just magically going to fix itself? People are being crushed under the burden of increased financing costs. And right when they're running out of money, the Fed isn't indicating that they're going to be lowering the cost of financing, but the exact opposite. It's about to get even more expensive. I mean, even Chuck Todd's Meet the Press is fact-checking most of the talking points related to Bidenomics.
Let's talk sort of where the facts, where the numbers, where the figures are here, right? Inflation matters to people. We know that's a big driver. It hit a 40-year high last summer of about 9%. It is down now 3.2%. It's lower than it was. It's still higher than what the Fed wants to see, which is why they've kept raising interest rates. It does mean that the mortgage rate, which you heard about, is up to 7.5%. That's the highest it's been in 20 years. Overall national debt, $33 trillion.
Very simply because Bidenomics has been an absolute, utter disaster, a failure. Every talking point's a scam. Recently, Joe Biden's been touting the stock market bounce back as a sign of his success. But again, as I point out, as I've been pointing out for the last almost 2 years, let's call it, the stock market hasn't budged. It tanked hard. I think the NASDAQ, which is generally more volatile, dropped nearly 30%, and it still has yet to recover back to its previous high. After injecting trillions of dollars into the hands of investors, the stock market is lower than it was in 2021. That's not the sign of a working economy. Generally, when the government's printing money and injecting trillions of dollars into the economy, the stock market has no choice but to artificially inflate. Bidenomics is working. Give me a break. People are literally going broke. I think it's very possible, I'd argue it's even likely, that the worst has yet to really hit. The worst is yet to come. I think the idea that Joe Biden's going to get a miraculous bounce back, a huge campaign slogan victory right as 2024 announces, I think that's absolute copium. What's probably much more likely is that we're seeing lagging indicators suggesting the true economic downturn has yet to even really show its ugly face. Joe Biden doesn't get to declare a Bidenomics recovery. Bidenomics is making you broke. Anyways, that's pretty much what I got for you guys. That's the most recent economic update. Hopefully you enjoyed the video. If you did, make sure to leave a like and possibly subscribe to the channel. Thanks for watching, and I'll see you on the next one.